In the world of finance, few stories are as legendary as the day one man took on an entire nation and won. This is the story of how George Soros broke the Bank of England. George Soros was the hedge fund manager of Quantum Fund, which was known for making macro bets across global markets. But in September 1992, he wasn't just making money, he was making history. And in 1992, he saw an opportunity, one that would shake the very foundations of the British economy. To understand how Soros did it, we need to go back to the 1990s. Back then, there wasn't a European Union yet. Each country in Europe had their own independent monetary and currency, coordinated by the European Exchange Rate Mechanism, or ERM. In 1990, Britain had joined the ERM. That system required Britain to peg the value of the British pound within a 6% range against other European currencies, especially the German Deutsche Mark. For example, the pound had a starting base rate of 2.95 Deutsche Mark to £1. So if the pound depreciated by 6% to 2.773 Deutsche Mark to £1, the Bank of England will be obliged to intervene by buying pounds at the open market. Maintaining that peg came at a cost. Britain was struggling with high inflation, a sluggish economy, and rising unemployment. Britain also had a trade deficit and a budget deficit. Overall, its economy was much worse than Germany's. As a result, the pound had depreciated towards the lower end of the peg with Deutsche Mark, that is 2.773, and to maintain the peg, the Bank of England was forced to buy pounds at the open market and raise interest rates, even as the economy was weakening. While politicians and the Bank of England were trying to defend the pound, George Soros saw the cracks in the system. He believed the pound was overvalued and that Britain couldn't maintain its currency pegs determined in the ERM. Without massive economic pain, Soros and his team at Quantum Fund began building a massive short position against the British pound, essentially betting that its value would fall, or the peg could not be maintained. They borrowed pounds through leverage, converted them into other currencies, and waited. It was a high-stakes gamble, but Soros was convinced the Bank of England wouldn't be able to hold the line forever. On September 16, 1992, a day that would later be known as Black Wednesday, the attack began in earnest. Soros and other investors started selling pounds in massive volumes, putting further pressure on the currency. The Bank of England fought back. It raised interest rates twice in one day, from 10% to 12%, and then to 15%, in a desperate attempt to attract buyers for the pound. Then Britain Prime Minister John Major even authorized spending billions of pounds worth of Britain's foreign currency reserves to buy up the pound. But it wasn't enough. The market was too big, and the fundamentals were against them. Britain simply couldn't afford to keep propping up the pound at that rate. Soros and other speculators continued selling the pound. By the end of the day, the Bank of England could no longer defend the pound. It gave up and withdrew from the ERM, abandoning the currency peg, allowing the pound to float freely on the currency markets. The value of the pound crashed like a waterfall. In the end, the pound dropped over 15% against the Deutsche Mark, or 25% against the US dollar at one point. Soros's bet had paid off. His fund reportedly made over $1 billion in profit from the leveraged trade, the largest single-day gain in hedge fund history. The aftermath was dramatic. The British government faced political fallout, and the event became a symbol of the limits of government intervention in financial markets. For Soros, it was a defining moment. He became a household name, not just as a billionaire investor, but as someone who could take on entire governments and win. Today, the phrase, "breaking the Bank of England," is still used to describe one of the greatest financial coups in history, a reminder that in the world of finance, even the most powerful institutions aren't invincible.